Hi, this is Chuck Sutherland with the Real Estate Expert Summit. Today we have Ted Blank with us, and Ted is a national real estate expert on a number of different subjects. He's a real doer. He makes transactions all over the country. He specializes in things like counseling and exchanging and finding good opportunities, upside deals, and he has a vast amount of knowledge because of it, and because of his time in the business, and he's an investor himself. So, Ted, welcome to the summit.
Thank you, Chuck. It's good to be with you and the group out there. I wish we were live so we could do interactions, because that's how I really enjoy teaching and visiting, is when we can go back and forth. But we'll do the best we can with the Zoom meeting.
Well, and Ted, you are an excellent instructor too. I've taken a number of your classes over the years. So, Ted, I have a question to start us off, and maybe the whole question for the hour or the time is, how do you find good opportunities in this or any market?
Chuck, thanks for asking. The one question I asked you to ask me is, how do I find opportunities? Because that seems like this is an opportunity time for real estate people. And I wanted to just share the formula that I use to find opportunities. I think a lot of people might specialize in one particular type of asset to find their opportunities, one particular location to find their opportunities. We're not going to be talking about that. We're going to be talking about something else. But before we get there, I live in Denver. Been there for 40 years, I think, and do some industrial brokerage and investment. And right now in Denver, there is not an industrial building available at $100 a foot or under. Everything's 100 and above. And you say that doesn't make sense for industrial. And I would agree, except that's what it is. And it is at 100 a foot and over because Colorado passed a law that allowed for the sale of production and sale of marijuana. And all of the industrial empty buildings immediately became filled with marijuana related activity. And overnight, the market changed substantially. So in Denver, I see $100 a foot, and that's normal. Well, for 2 months now, I'm in North Carolina. You're seeing me in the second bedroom of this little house we rented. We came out here for kind of a sabbatical and spend time with grandkids. So I've converted the second bedroom of this rent house to my office. So when you're in real estate, no matter where you are, you're looking at deals and opportunities. So I drove the market the other day. We're in a population of 500,000 to maybe 800,000 in a 20-mile radius. And I drove the industrial market, looked at 12 to 15 buildings. They range from $10 a foot to $85 a foot. I didn't see anything over 100. The 85 was nice, new, fully leased industrial space. You can imagine the $10 was kind of a 100-year-old brick, 2-3 story, but still usable and still being leased. So one would ask, is there an opportunity here? That's why I drove the market. Is there an opportunity because you can buy at $30 a foot here versus 100 in Denver? And I would say, no, that doesn't create the opportunity. The price per foot does not create the opportunity. Now, there may be an opportunity here in the event the federal laws change and we see marijuana nationwide growing and recreational medical use, that will create an opportunity. It's not the $10 a foot in a vacant building that's the opportunity. It's what you can do with it and what the market will allow you to do with it. How do you activate the opportunity? First, you have to have a guess, educated guess, that in this market, eventually marijuana is going to be here, or in all markets, through a federal change of the laws. If there is, then this will be a great opportunity market, as your markets may be if you have vacancy and don't have recreational marijuana there now. So that's just an example of looking for opportunities and trying to be ahead of the market. The people, I'm not a marijuana expert at all, and I've stayed out of that piece of the business. But the people I know say that they think there will be national change in the law in 2 years. I think that has something to do with our election coming up, whether that happens or not. But if it happens, that will create opportunities. So just be looking and beware. Yesterday, I was on a Zoom call, another type of opportunity. Not my formula. The marijuana is not my formula. But another type of opportunity we were talking about on a Zoom call with other professional real estate guys was the restaurant business. Is there an opportunity in the restaurant business? I suggest not, just because of the vacancy. There may be an opportunity, but it's not necessarily caused by the vacancy. So on this Zoom call, they were suggesting that we had some restaurant experts on, that 30 to 40% of all restaurants may not survive this. Some won't even open, some will open and still not survive. So will they ever come back? One of the fellows said, I wouldn't buy a property today. I don't know how long or if it will ever come back. My suggestion is look at history. After the Spanish flu, did it come back? After the Depression, did it come back? After World War I and II, did it come back? This too shall pass. But the problem isn't that the restaurants are closed. Restaurants close for a week to give employees time off. That's not a problem. The problem is the gap, is the length of the closure. Any restaurant can withstand a week or 2 weeks or a month of being closed. So the problem isn't being closed, the problem is being closed for a long period of time. So if a restaurant was successful in February of this year, and then it closed in March or April, can it survive until February of next year? Can it survive until the market is back to whatever normal means? Can it survive until people start coming back to restaurants? So the opportunity is not that they're closed. The opportunity is, how do you help a restaurateur survive the gap between successful 6-8 months ago and being successful again in 6 or 8 months. There's a variety of ways to help them survive the gap if they choose to and want to. Again, restaurants is not my formula. We will get to that. So how do they survive? Maybe with carryout, maybe doing ghost kitchens, which is just activating more of their kitchen and not so much the dining. Adding drive-throughs. One of the guys on the call yesterday said, if I owned a vacant or a closed Village Inn, I'd add a drive-through tomorrow if I could get the city to let me. So that's his formula for seeing an opportunity in the restaurant is add drive-throughs. But let's say it's more of a financial. You've got rent due. The landlord is not being as gracious as you would like. You have loans due, and it's a financial problem. It's a cash flow problem. So the issue is, how do I survive a year or 18 months with no cash flow coming in and cash flow going out? Well, then you get into what Chuck's a great instructor on formulas. We call the formulas. We need to find a way to survive a year to 18 months of maybe 10,000 a month negative cash flow, or whatever the number is. So we talk to our friends and we go, okay, who's got $10,000? Do you want 1 month of this deal? We're going to put 12 of us together and we're going to help this guy survive. And if he does, we're going to get 10% of the restaurant or 20%. And we're going to get all the restaurant script you can ever eat for the rest of your life. So we're going to help someone survive the gap and get something for that works for us. And there's lots of formulas on how to help somebody survive a temporary vacancy. So where do opportunities come from? I just made a few notes when Chuck asked me to talk to try to just figure out, where do they come from? What makes them? What creates them? Obviously, supply and demand, as it changes, and that's what's happened here. Our demand for sit-down restaurants went away overnight because of regulations. But supply and demand is out of balance. That may create opportunities. Highly motivated sellers, for whatever reason, may create opportunities. Cash available buyers, meaning someone who can move quickly, may be able to activate those opportunities. Superior knowledge of the market may create opportunities, such as there's a new highway coming through in 2 years. All I got to do is survive the gap for 2 years on this piece of ground, and then everybody's going to want to be here. There's a new employer coming to town. I have an example of a deal that didn't work. We were told that an offshoot of Disney was coming to a market in Fort Worth that a partner and I worked in. And we went out with the intent of optioning, buying with long closings, ground, because we thought we knew that Disney was coming to this market. Chuck, guess what? They didn't come. Oh, Chuck's on mute.
Yeah, they didn't come.
They didn't come. They didn't come. But that would have been a great opportunity because we had what we thought was superior knowledge that something good was going to happen in the marketplace. I'll probably talk mostly today about deals that worked, but the deals that didn't work is what you call college. That's your education. So superior knowledge is a way. Luck. I've had a lucky deal or two, but also they say those that work hard have more luck. I think that's part of it. New technology and new innovations and how to apply them. An example or two, the fellow who invented Uber saw that there was wasted cars just sitting around, people needing excess money. And they had this asset in the garage that wasn't doing anything. And then there was, on the demand side, people that wanted better service or different service than what the taxi industry was supplying. So with technology, with computers and software, he created an app that put a lot of people to work, put a lot of assets to work, and supplied a lot of opportunities for the people who wanted transportation. I'm in the fast food business a little bit. And we were talking about this yesterday on the Zoom call about drive-throughs. And the interesting thing is that you and I think every fast food restaurant has a drive-through and has always had a drive-through. But if you know the chain called White Castle, it's in the Midwest. It's a hamburger, slider hamburger kind of place. It started in 1921. 58 years after they started, they put in their first drive-through. That was in 1979. McDonald's started in 1955. They put in their first drive-through in 1975. So were they missing that opportunity the whole time? Don't know. But technology and a new way of thinking created an opportunity. So right now today, a lot of people are ordering food and getting it delivered, as opposed to even getting in the car and going through a drive-through. They're bringing it right to your house with Uber Eats and all that kind of stuff. So it's new thinking, old ideas, and we're creating opportunities. So some people are just smarter and do more due diligence than the rest of us. I see some of these younger people coming into my office with their laptops and just blow me away with the stuff that they can do. So opportunities are created a lot of different ways. We're going to get now to kind of my formula of what I think, how do you find opportunities? I don't think it's because of a market is fractured. I don't think it's because of vacancy or lack of liquidity. I don't think it's because of supply and demand. My formula is listening. Just that simple. Listening and asking questions. I teach a course nationally called Understanding Your Client. I'm a commercial real estate broker, CCIM, and a member of the Society of Exchange Counselors and the National Council of Exchangers. So I own properties, but I also broker properties. And the key in my brokerage business is listening to clients, asking good questions, and understanding what their abilities, inabilities, and needs are. And then trying to fill that motivation, give them the benefits that they are seeking, and just help them move forward in their real estate life. So once you have the information, then you need some formulas like Chuck teaches, and to then structure a deal. So is it as simple as just listening, Ted? Yeah, listening and asking and understanding. That's where you find opportunities. It's not because the restaurants are closed that I'm going to find an opportunity in the restaurant arena. While here in North Carolina, they announced in the local paper that a restaurant that had been open 55 years was closing. And this was a Greek restaurant, a lot of family involved, etc. I haven't heard back from them yet, but I sent an email to the owners to say, would you like to talk about your restaurant? I have no idea what they'll say, what they need, what they don't need, but I know it's not an opportunity at all until I find out what's their debt, what's their what's the condition of the property, who wants to stay, are they totally burned out, do they need operating capital, would they sell, would they joint venture? There's no opportunity until I get the information. So to me, the formula is be smart enough, keep your eyes open, and look for a building, a property, something that you think there might be a situation there that you can help. But then nothing happens until you gather the information. So we're going to look at 5 or 6, 7 deals that I've done that weren't opportunities without the information. I've been in the business for 35 years or so. So some of these go back, but I'm going to try to put everything in kind of today dollars. Kind of the first creative deal I did that was a great opportunity was getting me out of trouble. So opportunities aren't always, how do I make $500,000 or $1 million? It might be, how do I keep from going bankrupt? How do I keep from losing $500,000? So we were in a market that shut down. So it was a market problem. It wasn't my problem other than I lived in the market. I didn't create the problem. I didn't start COVID, but I'm in the market that COVID is. So I need to figure it out. So I was in a market that shut down, and I had a piece of ground, good industrial ground, with $500,000 debt against it. And it was maybe worth $500,000. At one time, it was $1.5 million, but the market stopped. There were no buyers, no demand. So I've got a $500,000 piece of ground with a mortgage payment with $500,000 of debt. So that's a problem. So I attend real estate marketing meetings. I was listening, using my formula, listening. And the broker at the podium said, my client hates this property, does not want anybody to call. She's a widow. Her husband managed it. He's gone. She hates toilets. She hates tenants. She wants out. I go, opportunity. And I wrote Bob a proposal that said, I will give you, it was $1 million property. I will give you $500,000 cash and $500,000 of free and clear land that I own. She'll get what she needs, which is out of toilets. She'll get cash to do something with. She'll have no management, and she'll have a piece of land that someday, sometime, 20 years from now, maybe, somebody will want to own that property, and she'll sell it. So put a sign on it, make sure the sign's metal and strong, and that the paint won't fade because it's going to be there a while on the ground. So he went to her with a $500,000 piece of ground, free and clear, and $500,000 cash for her $1 million property. And she said yes. Now, if you've been listening, there's still a problem. I've got a $500,000 debt on my land. So how do you get rid of that? Well, what we call definanced it. I went and got a loan against the income producing property, probably for $750,000 or $800,000. And then I think we actually financed the whole thing with a guarantee. So I got a friendly guarantor to help me borrow $1 million against a $1 million property, if I recall. But we free and cleared the ground. But the formula was listening to what the other side needed. So we did that, and we created a transaction that I was able to keep and operate a residential rental property for a few years and then sell it, and actually made a profit. The next one was a piece of ground that I went and looked at for somebody else. as a broker. They did not want it. And I thought, this is good ground, edge of Denver. It's got a little bit of terrain to it. It's not a beautiful tree-covered aspen type deal, but I think I could develop this property and sell it out in pieces. And I thought I could sell it for about $1.5 million in pieces. The problem was the sellers were wanting $1.5 million. Well, it would never sell for that, in my opinion. But they wanted $1.5 million. And I thought, well, I could offer them $750,000 and probably get chased off the farm with a shotgun, or I could listen. So I asked the broker who had the $1.5 million farm listed. It was more of a little ranch. And I said, why are they selling? What do they want? What do they need? Why is this wonderful property on the market? Just asking questions. He said, well, they're running about 20 or 30 cows. They can't make a living with that. They're putting up a little hay. They want a 200 cow outfit. So they were running 30 cows, not making a living. They wanted a 200 cow outfit so they were ranchers. They wanted to ranch. I said, if I found them a 200 cow outfit, would they trade me their property? Well, sure. That's what they want. That's what they need is 200 cows. I called a farm and ranch broker friend of mine. I kind of knew what 200 cow outfits sold for. And I said, can you find me a 200 cow outfit in your area, which happened to be Nebraska, that I can buy for $750,000? He said, yeah, I know one right now. I'll send you the stuff on it. So he sent me the stuff on 1,000 acres that I could buy for $750,000. It had a farmhouse and a barn, little river frontage, and could run 200 cows. So I sent the flyer, the brochure on this ranch. I said, would your people trade their property for this property, for this 200 cow outfit in Nebraska? They were so excited. And we did that deal. Now they knew exactly what it was costing me, $750. They saw it on the brochure. There were for sale signs on the property. They could call the broker. It wasn't smoke and mirrors. It was just, I will buy this property for you and simultaneously trade it to you for your property. So I, in essence, bought their $1.5 million listing ranch for $750,000. I broke it into 8 tracts, sold it for $1.5 million gross, maybe a little more, but not much. And, got what it was worth in pieces. So that was an opportunity, only happened by asking questions and listening. Chuck, I've got 4 or 5 more of these. You want me to just keep going?
Absolutely. And here's what I love about what you're showing. A lot of people talk theory. You talk doing. And people always want to know what people have done that demonstrates what they're saying is possible. So I appreciate you doing that.
Well, all of these, none of these were great opportunity just because of the real estate. They're all opportunities because of the formula that I use, which is listen and ask questions and listen and try to understand what somebody needs. So the next one was maybe the best deal I've ever done from the standpoint of size and profit. But I had 50,000 burning a hole in my pocket. That's all I had. I had a partner who had no money that wanted to do a deal. So between us, we had $50,000. And I wanted to buy something that had value add. So I was at a CCIM luncheon meeting, sat next to a lady who was a medical broker expert, medical office buildings, etc. I said, do you have anything that's kind of exciting, a value add? She said, well, I have a leased dental office. I said, no, that won't do it. She said, well, I have a vacant hospital. I go, really? Let's go look. So that afternoon, we went and looked at a vacant 300,000 foot hospital. That's a lot of real estate, particularly when you have $50,000 in your pocket. That's a lot of real estate. But we listened. Why are they selling it? What do they need? How can we structure this deal? So we wrote an offer, $3 million, 50,000 earnest money. You know where that came from? That's all the money I had. So we put up 50 grand, refundable for a period of time, on a $3 million purchase. Now, my thinking at the time when I put it under contract was that I was going to figure out how to lease the thing. I was going to make it worth $6 million by leasing it up. And I was going to get partners to bring the $3 million. So I went to my friends like Chuck. Chuck says, are you crazy? You're going to buy a 300,000 foot vacant hospital? What's it cost per month to operate it? Just vacant. Well, that was about 20 grand. And they said, that's crazy. We're not going to do that. So everybody told us that. People with no money told us that. People with a lot of money told us that. You're crazy. We don't want to be involved. So this seller was a hospital. They had operated this hospital. And what was the formula? I'm sorry. We're turning that off, Chuck.
Happens to all of us.
Well, maybe you edit that out, but so nobody wanted to participate with us. We still only have 50 grand and we got to buy a $3 million hospital. So we went to the seller and really understood why they were selling it. They had a Medicaid, this had been a Medicaid approved hospital. And I don't understand all of the ins and outs of that. But if they didn't sell this hospital by December 31 of the year we were under contract, which we were like in October, November, if they didn't close on that hospital by December 31, they would lose way more money than they were selling us this hospital for, $3 million. I never did hear how much they had at risk, but it was more than 3 million. What they had to do was get the hospital sold. They had to prove it to the feds, to the Medicaid, that they got out of the hospital business. And then there were some Medicaid reimbursements, they called them a snapback, of more than 3 million that they'd write them a check for. So they didn't really care what they sold it for. They just cared that they sold it. So one formula would be offer them $1 or 50,000. Well, that wasn't going to work. 3 million was going to be the number. So we went back to them and we said, we're not having much luck raising money and your property is not financeable. We've been to the bank, they won't loan us any money. Your property is not financeable. Would you own or carry? And they agreed to own or carry 2.5 million with 500,000 down. And we said, there's one problem with that own or carry is we're going to owe you money every month and this hospital is negative. Would you sign a lease back on the hospital so that we can make your payment to you? And they agreed to do that because they were looking at what they needed to get done by December 30th. So they did a owner carry sale lease back, and the lease payment to us made the mortgage payment to them for 3 years, if I recall. And then we would get it leased up in that 3-year period of time. There's still a problem though. $500,000 down. We didn't know how to, Chuck wouldn't put up any money. So we went back to the seller and we said, we don't have 500,000 down, but would you take 800,000 down and release that medical office building that's on the edge of the property? And they said, yeah, we'll do that. And the medical office building had a couple tenants in it. It cash flowed, and we were able to borrow 800,000 against the medical office building from a hard money lender. Now, the only thing that allowed that whole thing to work is that it's set on a separate legal. So whenever I'm looking at properties, I want to know how many legal descriptions does your property sit on? If it sits on one, that limits some things I can do. If it sits on multiple, it allows me to have multiple stage closings. It allows me to borrow against one. It allows me to have you owner carry against one. So that's an important piece of structuring deals, is how many legals does it sit on? So we ended up borrowing 800,000 against the medical office building, gave it to the sellers at 3 million. They carried back 2.2. They put 800,000 in the pocket. They leased it back for 20,000 a month. We made their mortgage payment for 20,000 a month. And we survived for 2 or 3 years until another group of doctors came along and bought it from us because they wanted to start it up again as a full-blown hospital. And they said, well, what's it worth? And we said, well, let's get an appraisal. So we got an appraisal. It's the only time I've ever really liked appraisers. They gave us the number that we needed to sell it. So it all worked out.
Hello?
Well, goodbye. That was my lovely wife. So let's see. Any questions on that, Chuck? Did that make sense? Owner carry, lease back. We increased the down payment. We got a building released, got a hard money loan, got an appraisal, and sold it for full appraised value.
So, so the question I would have would be that you got a hard money loan. Was the hard money loan enough to make the payment? I mean, was the payment at least enough to make that payment?
The medical office building had enough income that were able to make the payment. So when we closed the deal, I actually got my 50,000 back into my account and on to the next deal. But that was a more complicated but biggest deal I'd done to date.
There's one thing you also did in that was that you were not afraid to go back to the seller and work the deal out by asking new questions and listening to what their answers were.
And I'll tell you, most sellers would not have done all the stuff that we asked this seller to do, except for the motivation that they had, that we knew what they were trying to accomplish. And all along we said, we're trying to help you get to closing. And here's what we need to do that. So if we'd have been able to write a check for 3 million, that's probably how that deal would have come down, Chuck. But it was better this way because we didn't have to share the deal with anyone else. We were willing to share it with anybody for anything to get the money, but nobody wanted to do it. So we were able to structure it. And a hard money loan is the cheapest equity partner you'll ever find. So they might have charged us 10 or 12% on that deal, but that was better than giving away half the deal to get 500,000 down. So next deal, I was asked by a broker. I make a few loans, but I don't consider myself really a lender. But I was asked to make a loan. I'll back up. We do a lot of, and have done a lot of note buying from banks. That's when they were doing that, and they'll be doing that again here shortly. That's a place to find opportunities, is buying paper from banks or others. that have a motivation to sell it at less than face. We have done that business for 10 or 12 years. Not so much the last 8 to 10 years because the market's so good and there's so much cash. But buying notes is a good opportunity place. So one of the guys who brokered me notes called me and said, this isn't a note for sale, but would you make a client of mine a second mortgage on a rent house? I said, that's not what I do. I don't want to do it. I hate second mortgages. I don't want to make a mortgage. I don't like the address. I don't want to do it. But then I used my formula. I said, why does he need a loan? Well, he needs a loan for his business that's growing. I said, well, can I meet with him? Yeah, let's meet. So I went and met with him. And as a result of that meeting, figuring out what he needed, what we ended up doing was making him a $150,000 second mortgage note on his house that he wanted initially. But then I also purchased his building that he was operating in. It was 20,000 foot industrial building. Purchased it. He had an option to buy it from the landlord. He was a tenant. He couldn't exercise the option. He was running out of time. So I exercised the option for him into my name, bought his building, leased it back to him at a 10% cap rate. I had some 1031 money at the time and I put it into his building. And then I gave him an option back and I gave him the time he needed, which was 2 or 3 years, for him to re-exercise the option. So about 1.5 years ago, he called and said, Ted, I want to exercise the option. I said, that's great. Here's the payoff number. And he exercised his option back. I did another 1031 with those funds. And in the next week or two, he's going to pay off the second mortgage. So that all worked fine. But it started as a little deal that I didn't want to do a second mortgage on a house, and ended up in a very good, profitable deal for both me and him. And I'd like to mention that opportunities aren't always skinning the other side, so there's nothing left on the bone. It's helping people. If you help people get what they need, you'll find opportunities. The best deal I ever did was the hospital deal. We helped them get what they need. I helped Wayne get what he needed in basically financing his business for him while he was building it to give him enough time to control his building. I pitched some 1031 money, exchange money at a recent marketing meeting. And I said, at my advanced age, I want passive, triple net leased, long-term leased building that I don't have to go look at. And just a simple Dollar General kind of a deal, something simple. So one of my friends got me aside and he said, I have the perfect deal for you. It just doesn't give you any of the benefits that you're seeking. It was a land development deal. I said, I don't want a land development deal. He said, well, let's just look at this. So he was listening and I was trying to not listen. But then we started talking. So I ended up buying that piece of ground. I leased he and his partner part of it for the same income that I was getting out of the prior deal. So I did a land lease. He is now developing it today as we speak into residential. I kept another piece of the land and gave him an option on it. So basically there's 3 profit centers that came out of that one deal. I was looking for a Dollar General, which would have been 1 profit center. I have this piece of land that they're going to buy for the same amount as I was coming out. I've got lease income on a smaller piece of ground, and I'm part of the development company that's building the houses. So there's 3 profit centers that came out of that one closing. But when you tell somebody what you want and they don't listen to your words but supply what you need, you better do the deal. So we did. 7, 8 years ago, I had a piece of ground that was on a good hard corner, and Burger King came to me and said, would you do a build-to-suit on this property? I'm not really a developer, but I figured I could find somebody that could build a Burger King building. So I said, yeah, who's the tenant? Well, we don't know yet. It's not going to be Burger King Corp. It'll be a local franchisee, and we're trying to find one, but we like this location. They came back to me a month or so later, and they said, we're still interested, and we know who your franchisee is going to be. It's the Burger King employee that first approached you to see if you'd do this. He's going to leave corporate, and he's going to start a chain of Burger Kings in the Denver area. I said, well, that's good. Could I see his financial statement? He doesn't have one. He's an employee. He made 70, 80,000 a year. He spent 70, 80,000 a year, but he really knows the business. He's a good operator, and he needs a partner. I'm going, he needs a what? He needs a partner. I said, well, what does the partner have to do? Well, they just have to bring some finances so he can grow his business. So I said, I want to meet with him. So we met, we talked, we felt we were equally yoked. And I think that's important. His morals and character and what was important to him in life was kind of lined up with me. We became partners. And we opened our first store on the piece of ground that I was going to sale lease back to Burger King. And I ended up being the landlord and the tenant in that deal. We grew that to 13 stores, mostly buying existing stores from other franchisees. And I'm getting to the place where I'm tired of signing on debt and growing, but he's young and he wants to keep growing. So he said, Ted, do you want to stop at 13 and I'll start another chain or another entity and continue to grow my company? Or do you want to grow with us or just sell? I said, well, what do you need? I'll either stay where I'm at or I'll sell, but I won't grow bigger if I have to sign on more debt, which would have been required to sign on 20 million more debt to build and grow. So I said, I'll stay here or I'll sell. They said, well, we'd really like for you to sell so that we've got the history and the cash flow from the current chain. And we worked out an agreement, and I sold that for a nice profit. But a lot of it, again, was from that first initial meeting of just asking questions, listening, figuring out what he needed, what Burger King needed, and then putting the pieces together. I think we've still got time. The last deal, which I closed yesterday, involved a loan, but a broker called me a week ago and says, we have to close on the 30th. Well, the hair on the back of my neck stood up. Yesterday was the 30th, and he called me a week ago. I go, oh, I hate these quick, fast deals. But part of taking advantage of opportunities is being able to move fairly quickly. So either have cash, have line of credit, have partners, but a lot of times it just takes a little cash to quickly do a deal. Now you remember the best deal I ever did, I had 50,000. The deal yesterday was a little more than that, and it needed to close in a week. And I had to either be able to write the check or pass. Luckily, I was able to write the check if we could make all the pieces come together. So problem one was we had a week, and this lady has an extended care facility, and she had an option to buy it for $350,000. Expires September 30th, and the owner had told her, "We are not going to extend your option to buy this facility because we would like to keep it and lease it to you at a higher number." She wanted to control it, but she just didn't think there was any way. So the time kind of got away from her. So her broker called, and I said, "I can do the deal. Send me the title work." Well, we haven't ordered it yet. So we got a week to close. We have no title work. Her license hadn't been transferred to her yet because of COVID. So there's kind of a license on the building, but not in her name. There were 5 liens on title once we did an O&E, and we closed yesterday. And the formula we used was listening. Well, what else do you have? Because I can't close on this property tomorrow with the liens on it. She said, "Well, I have another property. Would you take a second on it?" I said, "Yes, I would." So we did the additional collateral formula in order to close, and we've given her release provisions so that she can get me off of that other one. But again, it was listening to what's the need, what can you do to help create a win-win deal. And this was not taking advantage of anybody. It was letting someone continue to control their dream, which was to own this property, not to be a tenant. So she bought probably a $500,000, $600,000 property for $350,000 that I loaned her 100%. Gave her a little bit of money for closing costs on top of that, but I got a second on another property that has a lot of equity in it. So again, it's just listening. So to wrap up, listening, being able to put some formulas in place, having relationships, a good strong team of legal and CPAs, networking and a little marketing. And Chuck, that's how I find deals.
That is awesome. You know, most of the time I run into people, particularly in like the residential world or apartment world, is that they're trying to get the best possible price they possibly can get. And in the process, they lose a ton of opportunity from just based on what you've demonstrated, because they're focused on one thing, the price. Like they think if they get the cheapest price, they've made the best deal. And I love what you do and how you operate. And I see you do this in every marketing session. I see you do this all the time. We really appreciate that you came to share that with the people on the summit here.
And glad to do it. And we were going to do a few PowerPoint slides kind of on my counseling, understanding your client, but I don't think we need to go there, Chuck. We'll just do that some other day.
That will be for a future event, right?
Future event.
All right. Well, thanks, Ted. I know that you're on vacation. You could say a sabbatical, and we really appreciate it. So I hope all of you out there at the summit do too. So stay tuned for the next speaker, who will be bringing us additional material on a subject that you may or may not know that you want to learn. So because we usually like to go learn things that we already know something about. So come to the summit, the next event, or come to all the events. All right. See you at the summit.
Thank you.